Hi guys. A few of my friends have told me I should comment on the GameStop, and well, you know what? I think that's been overcovered. But it did give me an idea to tell you about a little instructional video telling you about how to use one of my favorite trading tools. I think it's actually the best trading tool and one of the most underutilized trading tool, which could have helped a lot of people make some good money off these stocks. Not GameStop so much because that was so extreme. That's like winning the lottery. I don't even think the guys like Deep Flippin' Value on Reddit expected the extent to the move that it actually made. But anyways, my favorite tool is called a GTC order. It's a limit order. There's nothing fancy about a limit order, but most of your platforms for every brokerage firm, you're going to have by default your order goes in as a day order. You want to buy or sell a stock at a certain limit. Um, it's going to cancel itself at the end of the day. But a GTC is a good till canceled order. Some platforms only allow a good through order. You actually have to put an end date at some point, but and some brokerage firms will, even if you put a GTC, they'll cancel the orders after a year or something like that. So look into what is the case with your platform. But they're very powerful orders because it allows you to put in place a planned exit plan that everybody should have. The second you think of buying a stock, you should have a thought of where you'd like to sell that. Now you might like to you can let a stock a trend run. Like for instance, there are companies that I've seen that just have never-ending uptrends. Here, I'll give you an example. Amphenol. Um, this stock has been, I have a going to 1992, and it's basically been in an uptrend the whole time. There's been some volatility, but you wouldn't want to just put a sell order permanently and just cut your thing. Who knows where this could ever go, because we've got a trend that's been in force for 28 years according to this thing, and the stock has been in existence since 1932. So I don't know where it's come from, but it's probably pretty good. But going back to GameStop, GME. Having an uptrend, having a GTC will avoid some heartbreak. If you had put in an order, like right now it's at 50.31. Let's say you're really greedy and you expected the impossible and this to come $50 near the old peak of 57, or the previous peak before that in 2007. Around 63.77. So somewhere around the $62 area, you put in an order. You always give a little bit of a buffer zone, right? You would have sold it out by then, and without a panic. What happened here? This happened really fast. And it closed down here that day. I mean, would you have got 475? You would have needed a hell of a crystal ball to figure out where to put in a sell order, thinking, I don't think anybody really dreamed it would get that high. And being able to get an order in on time, you might have been chasing it and never got the order in. Maybe your brokerage firm, if you were at Robinhood, was halting sell orders and buy orders, so you couldn't even get an order in. But if you had a GTC order in advance, you had a crystal ball and you said, I want to sell this, I'm hoping one day this gets to 450, you would have sold it. But more realistically, your order would have been around $50 or $60, even if you were the most greedy person. I mean, there were some prices even here, like, there were months to pick this up, around $4 or $5. So if you had put in something at a previous high of 16.79, or 32, nobody would have faulted you for selling it out there, and you'd be out and you'd be happy. And it's probably going to come right back into this area. Who knows? But that's a good place to use a GTC. There's some good other examples. There was a previous peak on AMC. That was another one that ran with the short squeeze trend here. What have I done? There, you had plenty of opportunity to pick this up in the $2 to $3 range, and even if it stayed within the downtrend, 769 wouldn't have been the previous peak and the intersection of the downtrend would have been a healthy profit, 100% gain or so. Great thing there. Nokia, another one, big move. This was about 124% from here to here. So expecting that again would have, put you in around 735. Still a pretty good price. Not the high of $10, 9 something, but 9.95. But it would have been a really good price compared to where you start. Double your money. A previous peak in the range would have been a range that lasted years, by the way. Would have been over here at 731. Another reasonable place to put it. But only a GTC allows you to not worry about it that day. Like you could that day for that spike. That was one day, guys. Okay, I'm on the daily chart right here, up here. That's one day. If you were on vacation, if you were like in meetings, you would have missed that, right? You would have missed that. Having a GTC with a plan. Maybe your brokerage firm, maybe you bought the stock based on a recommendation from a brokerage firm where they're calling for 750. The second you buy it, you should have that sell order in. You should put the GTC order in. It can be changed after a while. Okay. Here we go. BlackBerry, another one that did this. BlackBerry was trading in the $5 range for quite a long time, right? You could have put BlackBerry in, and it had a range for years on the monthly chart. So if you got it around $5 or something, a reasonable place would have been around $14.75 to have a GTC order, maybe around $18. You don't have to worry about a trading halt. You don't have to worry about anything. Your order's in. If your GTC order's in, it's going to stay in. I can't remember how many times in my career over 33 years that, in a crash, I started in 1987, so I've seen a few of these things. Computers all go down. You can't enter orders. Either your platform goes dead or stalls, or the stock exchange's servers go down, or under the crush of the unanticipated massive amounts of orders come in. This happens. It's happened more times than I care to say in my career. So having a GTC really prevents some stress and heartbreak. You could be on vacation, boom, you sold at a beautiful price, the highest price in 8 years. That's there's one stock. Another cost was another one that popped with this. This is crazy. It's cost is still probably trading higher than it's going to end up. It's on the way down, but like you had years to pick this stock up. In around an average price of around 230, and then where would you sell it? Like there's some peaks here in the 370 area. Maybe you're looking for the last one that's around 650. You could put it in there. I mean, those all would have been real prices. Do anybody expect $120? Nah, I don't think so. I mean, even now, okay, if you hadn't had a GTC, you could probably have sold it higher now. But most, reasonably speaking, this is unusual. We're talking a stock that I have a chart back to 1972 here. The highest price it ever traded was $9 and where was that? Is this? Let me check. I might have. No, it's not adjusted for dividends. Okay, yeah, highest price this ever traded was $15.45. Right? Like, do we really think it's going to stay at 1792? I don't know. I'm not an analyst. Don't listen to me, but my experience says otherwise. I mean, I would have gladly have taken any of these prices, like $6.41. Some previous peak, or 431 if I bought it somewhere in this area. Healthy, a couple of 100% return. You're a happy camper. You made a lot of money. To think that it's worth more than its all-time peak when nothing really changed in the business, good luck. Bed Bath and Beyond, another company that had a good move there and has popped up, but I don't think it would have, a really cool place to put a GTC. This had a massive, beautiful head and shoulders where it broke down and then rallied. Yeah, that's where it should have been. That's not right under the neck, but the last place it ran resistance, which is usually somewhere just under the neckline. When it's classic, these things break down. They usually rally back to the neckline, in which case it faltered. It stopped here, but that would have been a great place. Now, hindsight's 2020. I'm looking at this here and saying, oh yeah, it might have been here, but really a dream place would have been here. So you could have actually had an order in here. And chances are, if that day you saw the move, you wouldn't have had time to put in that order. Maybe it traded there 2 days later, actually. But that day it hit up there and then closed down around $30. So, having an advance order at GTC is an incredible thing. Last one, Tootsie Roll. Tootsie Roll is a beautiful one. Here's a company that it's not the most phenomenal uptrend, but it's been in an uptrend since, like, here, my chart goes back to 1968, and it's been in an uptrend. It's not a great uptrend, but it's an uptrend, and so you couldn't be faulted for being long this stock. But where you should, whenever you buy a stock, maybe you're somebody who wants to buy into these dips here. It's got an uptrend and you're expecting a dip. You've bought it around here. Immediately after buying, you should say, where could this go? Like the previous move here was 55% from here to here. So I put this up here to show 55% would have been a target here, which is about $45. $45 would have been a beautiful price to put it in. Now, for something with an uptrend, you want to move that every once in a while. Like the next time it has, let's say this stopped here, came back down here, and then continue the uptrend like it's done for years now, right? Then you move this up. You go, okay, 55% from, say, here where it stopped up to there. Your next target is what, $51, $52? But you just, each bar is a month. You could have had a year maybe that you'd, I'll adjust that next month. But, and you wouldn't have missed any opportunities. So GTC, it's an incredible tool. I find I never use stops. I'd rather sell into panics and buy into panics, where buy when people are panicking selling, and that's where GTC, you just put it in for months. You have you're expecting you follow a trend line here. I'll show you here. You've got a trend that's kind of doing this. Whoop, here. Okay, so I've got a bit of a trend. It's got a couple of bottoms, this one, this one, this one. Now, you could keep moving your GTC, like just above. I would put it a little above. Don't be greedy, So $33 might be a good place to buy that later on. Over here, 31. Every month you can move it a little bit. A GTC buy order. That's a way to use it as a buy order. But point is, GTC limit orders are the most useful orders. They're going to save you a ton of money, and just being patient is a wonderful thing. So that's it. That was my opportunity to tell you about my favorite type of order. Thank you.